Okay, what's up traders? What's up tycoons? Super excited for today's video. Gonna break down Casper, okay, ticker symbol CSPR. Gonna look at the daily chart, go over the key chart patterns that we have currently, as well as the levels to the upside and the levels to the downside that we need to hold to maintain bullishness. Otherwise, we could see a reversal. So make sure to smash the like button, subscribe to the channel if you guys are new, and I do these viewer requests every week. So if you enjoy this video and you want to see your stock or crypto in the next video, all you got to do is comment down below, and we'll go ahead and jump straight into the chart now. Again, we're going to be looking at the daily chart on TradingView and really breaking it down for you guys. So what we have currently, in my last couple updates, right, when we came down here into our established demand zone, and I'll just break down what a demand zone is really quick. It's basically like support and resistance, but rather than just one specific level, it's an entire range. Okay, so we have our nice little range here. Multiple times, buyers push the price up on Casper here in the past, right, back in September. And then here in November and December as well, we established this nice demand zone and we were able to push up. Okay, so we were looking originally for a nice 1, 2, 3, 5 structure to take us up here to our overhead supply zone. And we were able to get that. I did that update when we were right about here in this phase. And I said this could turn into a 5-wave impulsive move to the upside to take us to our overhead supply zone here. Now, we've come into the supply zone and we've really just been wicking, right? And price action hasn't been too clear. If you take a look, most of the bodies of this candle are closing within this range and we're, wicking up above, wicking down below, but we're doing what we need to do, which is holding the major retracement levels. If you take a look, the 38.2, the 50%, and the 61.8, those are done over here by using this Fibonacci tool on TradingView. And these are the three most common and most respected levels that you can use. Now, it's really important to start using these because about 70% of trading is done by algos and done by algorithms. So using a mathematical formula to generate your price levels is really going to help you out a lot versus just using the naked eye to draw your own support and resistance. It can be a little tricky. Now, you use these Fibonacci levels because you can spot trend continuation or trend reversal. So nothing moves up in a straight line or down in a straight line. You get the move up, retracement, continuation higher, or a move down, retracement, continuation lower. You can spot reversals when you move up, retrace, consolidate, and then break through those retracement levels. That's a potential reversal to the downside. Same thing with the downside move. If you retrace, consolidate a little, and then break through those retracement levels, you can spot a potential reversal to the upside. So if you take a look, we have our swing low connected to our swing high up here. We had a move up, and then we pulled back and we tested our 61.8% retracement level, and we found support, right? And buyers have stepped in and we're starting to push up on Casper. Now, we did get a MACD sell signal right over here, and that resulted in, a little drop right here down to our 61.8% retracement level. But Casper's done a really good job of buyers still being present in the market and really pushing up higher, and staying above our major retracement levels. So ultimately, we're looking for a larger 1, 2, 3 to our upside price targets here of 0.0447 and also 0.0482. So these are our next price targets up here that could form our next supply zone if we do get a breakout. Now, the breakout we're looking for is this pattern right here. Notice we have a trend line here and a trend line here. It's kind of a bull flag, right? You could say it's a bull flag. But I want to show you guys what happened the last time we got this set up. Okay, we actually got this set up previously here. All right, and we had a nice looking setup. All right. Now, what we did get was a couple signals as well over here. So if you take a look, I have some circles highlighted here. So we have a low and then a lower low, right? Clearly, it is in a downtrend right there. It moved lower. But on your RSI, your relative strength index, we had a low and we had a higher low. So this means that we were building relative strength as price was dropping. And this is basically something known as bullish divergence. It's an indicator you could see some bullish activity in the future. And ultimately, we were able to break out of here and form a bull flag over here and really just start that nice rally that Casper had in October. Okay, we also got a MACD entry signal, very similar to the exit signal. You're going to be looking for that blue line, and we see the blue line crosses above right over here, right? We get a nice move, but we pull back, we get that bullish divergence, and then we really get the breakout that we're looking for. So over here, if we see, it's very similar setup, very similar structure. But what we haven't really got yet is we haven't got a bullish divergence. I don't think that necessarily we're going to get a bullish divergence as the RSI is over here above 50. Now, RSI above 50 means that we're showing relative strength. Okay, above 50 is on the bullish side. So, the relative strength index is on our favor. It's approaching 70, which that's a technical definition of overbought. So you do need to be a little bit cautious. As you can see here, when it was overbought, we did end up pulling back a little bit, but just because something's overbought doesn't mean it can't go higher. We're starting to see some of the candlesticks potentially close above where we've been closing and, really test some of these levels that we've been wicking at. So if we do get that breakout, again, most likely it's going to take us probably to our next zone up here, which is about 0.044 up to 0.048 on Casper. Now, what do we need to be cautious of? Well, we need to be cautious of, again, our major retracement levels, okay? Because we moved up, we pulled back, we bounced. But if we continue to consolidate really and, ultimately break our 61.8% retracement level, which is going to be 0.03141, then that's when we could get the potential reversal back down here into our demand zone that we've tested many times before. Now, keep in mind, the more times you test a zone or you test a level, the weaker it gets. And we've tested this level a lot over the past 6 months, right? This is September over here. We're testing it. Demand, 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 demand. And we've been able to, really rally in between this range of about, let me go ahead and give you guys the levels here. This is 0.025 all the way up to about 0.027. 0.027. Okay, so that's been our pretty good valid demand zone. Again, the more times you test it, the weaker it gets. So we don't really want to come back into this zone. We want to hold above our 61.8 if we do end up getting some type of breakdown from this pattern. But ultimately, we're following the structures pretty good. All right, we got a nice 5-wave impulsive move to up to our original supply zone. We've had a larger ABC forming, right? And we've already done our 1 and our 2 right here. We could potentially be getting our 3-wave up to our bullish price targets. Now, if you take a look, we'll actually go to the weekly chart real quick. And there is something that we need to be a little bit cautious of. And it's a potential head and shoulders. Now, I'm not saying that it has to happen, that it's guaranteed. But if you take a look, right, what we have here is going to be, we have a left shoulder right here, we have a head, and we're forming a right shoulder right now. So we really, really need some follow through and really to get a good breakout. As you can see, we're coming up, we're testing that trend line. Things look good for a breakout to the upside, but we have to keep an open mind and open perspective, right? This could end up being a head and shoulders if we get no follow through. And if that head and shoulders happens, okay, the bearish target is going to be right around 0.0185. So, I got a lot of hate in the last video for pointing out, just some of the bearish price targets, but I like to keep an open mind and really just be prepared for all scenarios. Okay. And that's what I want you guys to do as well. Now, if we do come up here and hit our price targets, most likely we will get some type of a pullback. But what we'll do is we'll adjust our Fibonacci retracement levels from the lows to the new highs, and then come up with the 3 major support levels that we need to hold to continue higher. We still have our original bullish price targets up here. Okay, 0.048 was one of them. We did hit that over here, right, when we got the initial breakout and bull flag. Over here is our next bullish price target above 0.048. That's going to be 0.057. And above there, we have 0.0627. Now, there's a lot of work to be done to come up to these levels. So, for right now, we're really just paying attention to this pattern right here, this symmetrical triangle, and seeing if we're going to be able to get a breakout to take us to our 0.044 to 0.048 levels first. So what we want to see is we want to see this MACD curl back above, which it's trying to do right now. As you see, the blue line crossed down below, and we got some type of a pullback here, but we held our major retracement level. That's a good sign. We want to see the blue line curl back above, all right, and really start to gain some momentum and head back in an upwards direction. That could mean that we're going to come up here and hit our zone. So pay close attention to the levels. Hopefully you enjoyed the video. If you did, smash the like button, subscribe to the channel if you're new, and I'm out.